Hi everyone, it's Marco, and in this video I will be giving you my top 5 dividend growth stocks in this month of July 2022. So as you know, at the moment there's a bit of a financial crisis, meaning a lot of stocks are actually at a discount, which is an excellent opportunity to invest in dividend paying stocks. So before we go to the list, I wanted to give you my top 3 criteria that I use to actually pick those stocks. The first one is a yield. I always look at what returns I will get when investing in a dividend growth stocks. So I'm usually looking for something above 4% and let's say less for sure than 8, because this will be not sustainable for the company usually, so that's my range for yields. I also look at the P/E ratio. That's basically the price per stock or share divided by the earnings per share. And if it's below 20, it means that the stock is currently at a discount, and that's also what I'm looking for in this selection. Finally, I look at the growth of the dividend, meaning I look at how much the company actually raised its dividend in the last 5 years. This is really important because the growth aspect in dividend investing really determines what will be the yield of your portfolio compared to the cost of which you bought those stocks. So this will be very important for the future, because you can get yields of 10-15% compared to the price at which you bought the stock if you just invest in good dividend paying stock that will raise their dividends and just wait like 5-10 years. You will get a very high yielding portfolio compared to the price at which you bought your stocks. So this is very important, and that's my third criteria that I look at the growth of the dividend. So now let's actually go to the list. The first one is the 3M company. It's a very large US conglomerate that is present in many fields like healthcare, consumer goods, and it has been a part of my portfolio for a long time. So I didn't, however, recommend it in any of my videos so far because it was way too expensive. And now it's at a discount again. So let's right now look at the numbers of this company. So if we look at those graphs, basically you have a yield of 4.5%, which is very good, but especially the P/E ratio is very low at just 12. So that's meaning that the stock is really at a discount at the moment. You also have an excellent dividend growth over the 5 last years, even if it's slowing down, like many companies actually at the moment, but still an excellent dividend growth stock. And also the payout ratio is below 100, meaning the company has no issues of paying its dividends. So really a strong player here in this month of July 2022. The next one I wanted to mention is BMW. So that's not one that I mention usually. I usually don't mention European stock that much because they have a strange dividend policies. They also usually are way too expensive. But again, because of the crisis, BMW is, well, I don't really need to present it. So let's look at the numbers right now. The yield is above 7%, which is really high for a dividend growth company. But it's also at a very cheap price because the P/E ratio is just at 5. And also, even if they lowered a bit the dividends over the past years during the COVID crisis, it's now back up. And definitely when you look at the payout ratio, it means that they have the space definitely to grow this dividend in the future. So definitely a very good dividend growth stock to look at. We'll actually stay in Europe for the next one, and I wanted to mention Siemens. So Siemens is a very large technology company in Europe, based in Germany. And again, if we look at the numbers, it's definitely a very good opportunity at the moment because they have a low yield at just under 4%. But it's also a very cheap, discounted company at the moment with the P/E ratio at 12. And also, they have grown the dividend over the years. There was a little dip during the COVID crisis. That's okay because most of the stocks actually did that. And also, they have a payout ratio under 100, meaning there is still room to grow this dividend in the future. So again, I don't usually recommend European stocks, but this one definitely a strong player at the moment. To finish, I will talk about two more American companies that are present in most of my videos. It's really like textbook dividend growth stocks. The first one is Verizon. So let's look at the graph right now. So basically, Verizon, very strong yield, 5%. And if you look at the curve of the growth of the dividends on the right, this is really like textbook in terms of growth of the dividend. It's very regular. It's good as well, 10% growth over the last 5 years. There's no sign that it will slow down whatsoever. So definitely a very strong player in the dividend growth space that should be in any portfolio really. And finally, I wanted to end with another one that is present in most of my videos. It's Walgreens, another US company. And if we look right now at the graphs, you can also see that it's a very strong player. Yield also around 5%, P/value ratio under 10, so very good opportunity at the moment. You can see that on the left graph, it really fell in value over the recent times, but on the right, you can see that the dividend was just a bit slowing down. That is the case with a lot of dividend stocks at the moment, but still a lot of room left to raise this dividend in the future because of the quite low payout ratio, so definitely also a very strong player. So just to sum up on those dividend growth stocks for July 2022, we had the first 3M company, BMW, Siemens, and then two more American companies, Verizon and Walgreens. So this was a list of those dividend growth stocks that I recommend for July 2022. I hope that this was useful for you. And if you have any questions about the video or about investing in general, don't hesitate to leave them as a comment. Also, I put just below the video some resources to help you get started in dividend growth investing. For example, I put my list of the things I look when I want to pick dividends, and I included that into my guide about dividend growth investing. It's for free, you can just pick it up just below the video. That being said, thank you again for watching the video, and I will see you in the next one.